Hey, hey, hey. Hey, hey, hey. Alrighty. Yeah, people trying to get in. What's up? What's up? The stock market is doing what the stock market does. It's doing what it does. You hear me? You gotta make it do what it does. Alrighty. So let's get into it, man. Let me give y'all this market update. I'm getting out of Let me bring some light over here. Let me bring some light over here. All right. All right. Welcome back to another episode of Financial Fridays with your boy Buck Bandit P here on the Financial Corner, where we break down investing for average everyday people so we can go out here and get this money. But you already know the motto: no shortcuts, no excuses, just progress. Before we get into the show, make sure you get your free share when you open up your brokerage account. You're going to get a free stock. So make sure you open up your brokerage account with Robinhood so you get your free stock. All right. Also, if you don't have your high yield savings account, make sure you click the link down below. You get $100 just for opening up a high yield savings account with Allah. You already know what time it is. And also, make sure you grab your financial freedom journal and definitely get your Buck gear. Definitely go follow the Buck Bandit clothing page on Instagram. Definitely be a subscriber because that's the only way you can order the clothes. Or you could be subscribed to the Buck Bandit Network where we got over 169,000 subscribers. Appreciate y'all. And just be a member over there, and then you can put your order in that way. But you only can get the Buck gear exclusively. So you already know what time it is, man. Appreciate y'all for being here. But let's get right into what's going on in the market this week. Like, yo. All right, so look, if you only watch your stock portfolio on green days, then you are missing the actual money making moves. All right. This week, tech took a massive punch to the face. Bow. I mean, tech was straight down. All right. A shock in the jobs report completely flipped the script. All right. So interest rates are definitely not looking like they about to come down now, and that's all investors really care about. All right, so money is leaving the overhyped tech and sprinting into the value sectors right now. Okay, in this video I'm gonna break down exactly why the market is rotating, the massive volatility traps people might fall into, and the stocks you need to have on your radar. All right, so let's get right into the show, man, because we ain't got time to waste. Yeah. So let's get right into the show today. This week's main story is the great rotation in the job shock. That's the main headlines behind what's going on right now. All right. So we saw a massive shift in the market this week while the Dow, it really maintained its 50,000 mark. Like the Dow really ain't fall below there, but the S&P and the Nasdaq took a hit. Okay, so we got to end is at the time of this recording. You see what it is, so it's still down. They ain't looking like it's recovering no time soon. But don't fear, like that's cool because we was just at these all-time highs. This is the cool off. This is kind of normal. But let's go over why it happened. All right, the massive tech pullback. We seen the AI and the semiconductor trade hit a massive speed bump, and we seen Nvidia will not get past this 227 line. It get there and it drop right back down every time. Like so, but the thing why everything else fell is because Broadcom, AVGO, it fell. It fell crazy. It fell enough in order for everybody to start getting worried. So that's basically what's happened. And that's what happened with the tech and why tech really down right now, because the demand like is so crazy. People wondering like if they really gonna be able to meet it. All right. So the thing was the why AVGO came down because the guidance didn't get better. And what I tell you, the stock market is a forward-looking indicator. So anytime guidance doesn't look good, like guidance was the same as last time they checked. So that's why the stock slid. But a big thing that happened this week was the job shock. Okay, what is the job shock? The job shock is the Labor Department didn't expect the economy to add 172,000 jobs. Okay. So this doubled Wall Street's expectations. And why is that bad? People are like, I know you're like, well, people getting jobs. Why is that bad? The reason why investors and big money view that as bad because now the Fed is not going to cut the rates and make money cheaper to borrow. And they don't like that. Okay. So the interest rate realization, while a strong economy sounds good, like I just said, it sounds good. Yes, people getting jobs, it ain't looking as bad, but it shuts the hopes of a federal rate cut, okay? And that is what people really that's what really matters to investors when it comes down to this money, because the cheaper money is to borrow, the more profits they gonna make. Okay, so as a result of that, the bond yields went up. Crypto caught a crazy downfall. Bitcoin right now is getting beat down. And the speculative, all them speculative stocks out of there. Everybody is rushing, everybody is fleeing out of there. They going into defense, they going into blue chip safe havens like healthcare and financials, okay? And let me just give y'all a couple of these healthcare companies because these are some good companies you might want to pay attention to. Okay. We got Cooper Companies, ticker symbol COO. They definitely been running up lately. We got Medtronic, ticker symbol MDT, been running up lately. We got United Health Group, ticker symbol UNH. And last but certainly not least, we got my baby Eli Lilly, ticker symbol LLY. And the reason why I like Eli Lilly is because of the GLP-1s. Yes, the weight loss and all of that, they are making good progress with this medicine. So that is a major thing in my opinion. People not going to be taking them GLP-1s to lose weight. Are you kidding me? That's the company that owns them, Eli Lilly. So that's why I like them. That's my top tech that's my top healthcare companies that you might want to pay attention to. Okay. So next week, watch list. All right. This is the crucial volatility triggers. Okay. Because next week is all about whether tech can find its footing. Like, is it going to find a good support, or if the market is going to be like Niz and just slide for the rest of June. Okay. Because it's not looking good. Like, as far as June is concerned, it's not looking good so far, but we are still early, but we'll see. So the S&P is sitting heavy in overbought territory, even though it's selling off right now. It's still technically in overbought territory. All right. So next week we want to keep an eye on these major corporate earners. All right, because we want to gauge consumer and enterprise spending. We want to gauge how they spending money, and that can kind of give us a clue on what kind of environment we're in or heading for. All right. So a major on Wednesday, June 10th, Chewy comes they report their earnings, ticker symbol CHWY. And this is a major e-commerce consumer discretionary spending play. So if we can see how markets are pricing in Chewy and all that, because they actually pricing in that they're going to have a record breaking earnings. So we gotta pay attention to Chewy and actually see how that turned out. See how people spending that money when it comes to the e-commerce and consumer discretionary. June 10th, also on Wednesday, we got Oracle. They reporting their earnings. Ticker symbol ORCL. Okay. And this is the absolute most critical report of the week. Why do I say that? Because last year, Oracle and they cloud and AI integration and the infrastructure and all the money that they put on their balance sheet for that, Wall Street, like after that, they stock went up 35%. So Wall Street is going to see if it's still that same type of demand or if it's slowing down. So that's going to be a good company to watch for, Oracle. And lastly, Adobe. I know I talked crazy about Adobe. Adobe ain't going nowhere, just to let y'all know. But Thursday, after the close, June 11th, Adobe has been a major mover on past earnings. Okay. So it's critical to check how this generative AI and this agentic AI is actually translating into the software revenue. Like, are they actually making money? All right. So that's three things you want to watch out for next week. But also, I'm gonna give y'all a couple more, okay? Let me just as promised, because I like to over deliver and just give my community, you know what I mean, a little bit more. So, my bad. So, three stocks that I want y'all to pay attention to. We already went over one of them. I'm gonna tell y'all a little bit more why, but I'm gonna give y'all two more, okay? Number one is definitely Oracle because it's the ultimate momentum and the catalyst play, all right? Oracle reports earning on Wednesdays, and with the implied volatility, and it's already spiking, like Oracle already has been running up, okay? So the market is expecting a drastic move, okay? So this stock will serve whether it's back up for the AI, like they still spending money and everything all good, or they might be scaling back and trying to see how things pan out. So if they knock their earnings out the park, we might see the whole tech sector rally a little bit off that. So that's might be something to watch. And if they miss, the same thing might happen. The tech all the tech sector might drag the tech sector down with it. Okay. So the second one is Broadcom. Okay, well, I already went over this too, but it's Broadcom. This is the body dip AI heavyweight right here, because Broadcom is very much needed in this this next AI phase. All right. So Broadcom is down significantly this week because they didn't raise, like I said, their guidance, their AI forecast, but the underlying fundamentals is still strong. Like they balance sheet is great, and the company is roughly up 20% year to date. Okay, so for long term investors looking for a premier like semiconductor company, AVGO is definitely where you want to be looking at, and you might be able to get in at a good price point because it came down. Okay, so and for my last one is Caterpillar, ticker symbol CAT. Even though this already ran up year to date, like this John has legs to run because they need the machines to build these data centers. All right. So this is the heavyweight giant fueling the AI. Like when people think of the AI boom, they're gonna think of the software, they're gonna think of the chips, but it can't run without the data centers. Okay. So this is the heavy infrastructure play. Like Caterpillar has been around for a long time and they not going nowhere. Okay. And they are literally powering the construction of the new AI grid. All right. So it's like it's not going to shoot up super crazy. Well, I don't know, because over these past months, it has been shooting up super crazy, but it's going to give you stability is what I'm trying to say. Okay, so this is the picks and shovels play. You don't necessarily gotta go where the gold at. You could go where they selling the picks and shovels, because those companies are going to make a lot of money too. All right, so that's your financial Friday, man. Appreciate y'all for being here, yo. Like as I always say, man, high tide raise all boats. So if this helps you, all I ask is that you share with somebody else so it can help them too, man. We're trying to make this money this summer. You hear me? And it ain't that hard because there's gonna be a bull market somewhere. And trust and believe, we gonna find it. So grab your free stock of Robinhood. Well, grab your free share from Robinhood when you open up your brokerage account on your way out. And also get your $100 from Allah when you open up your high yield savings account on your way out. And also get your financial freedom journal on your way out. And make sure you tap in with the Buck Gear, the Buck Bandit merch, man. Appreciate y'all for being here. Love y'all. Appreciate all my 2,000 subscribers and growing. Until next time, you already know. Let's go out here and get this money.